What's up, guys? Trey Campbell here. Wanted to make a quick video just to kind of jump into what I'm doing and why I'm trading NADEX. So I wanted to make a video of that. A lot of people from the outside looking in will see NADEX and see that it looks like the risk reward is off balance because it's a binary option, which means it expires at 100 or 0. But you can trade within that range as well. So it's not just something that, you buy it, you're stuck with it. It's like a traditional option in that way, except for you don't have to hold it till expiry is A, and B, you don't have to deal with, like with traditional options, you'll have to deal with 2 or 3 days worth of settlement. With binary options, it's cash in, cash out. It's worth 100 or $0, and it's a direct exchange. So basically, you're not dealing with a broker, you're not dealing with a middleman. You're dealing exactly trader to trader. There is no you don't know who's on the other end supplying you the shares. It is, if you're buying something, you're buying something for somebody that's selling something. So to put that in perspective, what I wanted to do is I wanted to break that down and kind of give you the way I think about it. Now, I think about it as a percent style trader. I'm a percentile. I trade in percentages. Like, I like math. I like to trade in percentages. So I know how much risk, how much bang for my buck percent wise on every trade. I know the risk, I know the percent gain, I know all that stuff, and that means more to me than the money itself. I want to make sure that if I'm purchasing something for $250, if I can turn around in 15 minutes and sell something that I've purchased for $250, if I can turn around and sell that for $350 and make about 40% return on my money, then that's a good day to me. And that goes with the if you could turn around and make $500 on $1,000 investment, that's a really good return. And that's the way I look at NADEX. So when you see me purchasing contracts for $250 and I can turn around and sell those for $350, that's pretty much what I'm looking for. I'm looking for those percentage gains, and I like to stay like anywhere from 20 to 50%. And if I can turn around and sell something and buy something, and then turn around and sell it and make a 20% gain on it, that's huge to me. I come from a car dealership background. Like I had my own car dealership. My wife and I had a car dealership for 6 years, and I would travel around all over the United States, mainly up north, like Pennsylvania, Maryland, just in those general areas. And I would travel up there and I would purchase bulk amounts of cars. And the reason I could do that is because up north there were more big bulk wholesalers, and there was just a big business up there. There were just so many cars. So I could travel up there and buy 30 cars at one time, for $30,000 or $40,000, and then come back and just kind of give a median price on every car. Some cars were worth $5,000, some cars were worth $2,000, some cars were worth $3,000. The value of them it varied, but the overall bulk price was $30,000 to $40,000, and I could divide that by the amount of cars that I bought and just kind of give myself a median range of each car. And so that's kind of like my background. That's where I came from. And then I could turn around and say, okay, if I can sell these cars for X amount of dollars, and I could turn that 40,000 into sell 15 of the 30 cars, and I can turn around and I can make my initial investment back on the cars, then I've got 15 more cars that I can, you know, potential have as sitting there as profit. So you know, so that's the way I look at it when I see that. I see a binary option, I see a car, I see an item that I can purchase and I can own for, you know, as low as $50. You know, if you bought one contract, it's at the money, it's $50. Now I can turn around and sell that $50 contract for $70 and make $20 on my 50. You know, that's a huge percent gain compared to trading stocks. Now I'm gonna break that down right now because I'm gonna go over the difference. Let me get my pencil out really fast, and I want to give you an example. Let's say there is a stock that costs $50, and you wanted to buy 500 shares of that stock. Okay. Actually, you know what? Let's just make that easy. Let's say you got $50 stock, right? It costs $50 per share, and you wanted to jump into this thing for you needed 1,000 shares, and basically what you were going to do is you were going to try to scalp it for 50 cents. All right, now doing that, keep in mind 50 cents is what to 1,000 shares? That is $500, right? So you are trying to make $500. Now, I understand most brokers, well, every broker really will leverage you and give you at least 4-to-1 leverage. Leverage is an evil tool. And here I'm telling you, I've been trading since 2007. Leverage is an account killer in itself, because we as humans lust after shiny things, after money. We lust after that. So what we're going to do is, the first thing we're going to do is we're going to use that leverage, and we're going to blow our account up, or we're going to take a hit so big we can't stand it, and then we're going to walk away with our head down. That's why there are so many failures in this business. Leverage is going to consume you and kill you. There's other cancers out there as far as trading goes, and it pertains to accounts that you can purchase that give you you know, this huge amount to trade when you've only got this much invested. Excuse me. Now I'm not downing them, those companies, because there's more than one. I think it's a fantastic platform for learning, and a fantastic platform for beginner traders. However, if you're serious, like if you really get serious and you live within the United States especially, and this is really with any country that you're in, you know, like for me, I prefer to do business with, you know, if I'm going to let somebody hold my money in an account, I would rather be able to retrieve that money when I want it, and I would rather be able to submit a you know, to get it out, and then 2 days later it'd be sitting in my account, or a day later sitting in my account, not once a month, and then, you know, you submit it on the 1st and then it comes in on the 21st. You know, that kind of stuff it's not right, and it's not fair. Like I said, I don't have anything against these particular places. I actually think they're brilliant, and much respect to the guys that created that platform for people for education. You know, it gives them a way to get in there. But never mind. Let's jump into this. So your mindset's going to be a little bit different if you have one of these accounts, because you're leveraged so much. You can purchase 1,000 shares of a $50 stock, and not really think about what you're doing. But you need to think about what you're doing. If you bought a $50 per share stock and you got 1,000 shares to try to make a 50-cent move, your purchase power, the money that it takes you to purchase that, to get involved and own that much of that company, is $50,000. $50,000 to make $500. So your capital investment is to buy $50,000 worth of shares in XXX. Actually, that's a ticker. Well, X is, so we'll go with YYY or UUU something. 50,000. So now, if you look at it in a percentage perspective, you're going to invest $50,000 of your money. Now, I'm talking about guys that have a real account in the United States that is regulated by the FTC, that is regulated and is legal. Not saying that these other things aren't legal. I'm saying A, for tax purposes, B, for the purpose of doing business legitimately, right? You need a regulated broker. If not a regulated broker, you could become a part of an exchange, and that's what NADEX is. It's an exchange. There's no broker. So, and is regulated by the FTC as well, and regulated, U.S. and NADEX is legal and tradable in just about every country. You can go to their website and find your flag, and you probably can find it. So jumping back to the math here, you're going to purchase, and like I said, this is not going to matter to you if you are trading one of those buy-in accounts. But if you have a traditional broker where you have to have $25,000 worth of cash on hand sitting in the account to do business, they're going to give you about 4-to-1 leverage. Okay, 4-to-1. Now, 4-to-1 leverage on $25,000 is what? It's $100,000. So you're gonna take up half of your buying power with 25,000 leveraged to purchase 1,000 shares of a $50 stock. Now, take in mind, that's how much capital it took you to get involved. Now, let's say you made 50 cents. So you made $500, right? That's great. Awesome job. You just spent $50,000 to make 500, which is crazy because the percentages are so low. Your returns on $50,000 worth of purchase is terrible, and I'm going to show you why. Let me bring the old calculator out here. I'm going to bring it right down here out of the way. So yep, I was right. So if that's really weird. Okay, let me just start over. 50,000. Okay, 50 grand. You make $500. You know how much percentage you made on that investment? Okay, you made 1%. 1%. That's how much money you made. I want you to let that sink in for a minute, because that's not a whole lot return on your money. $500 is great. If you could do $500 a day, Hey, that keeps the day job away, right? That's a good living. $500 a day. Problem is, it takes 50 grand for you to make $500. It shouldn't take 50 grand to make $500. Now you could say, well, I could do it with 25, take 500 shares and make $1. Well, I guess you could. That'd probably put you up to about 2.5% or something like that. Maybe 3%. I'm not sure. It's not good. It's not good percentages, in my opinion. So let's break this down. Let's say you need to make $500 in NADEX. What can you do? Well, let's say you find a really good setup and you buy 10 contracts, right? For $50. You're buying them at the money. So take all this down now. So you've got 10 contracts at $50. All right, so how much is that? That equals $500 total that it costs you to purchase those contracts. If they expire at 0, you're going to lose $500. Now, we didn't go over how much you can lose on the 50K, because you could lose it all. Hell, you could lose your whole account in reality. If you just did poor money management or whatever, you could really get hurt really fast. With NADEX, you're capped. You can only lose your purchase amount. Just like if I went and bought a car for $500, guess what? I could let it sit out here and rot to the ground and get nothing out of it, later on in time, and I've still only lost the $500 that I paid for the car. That's NADEX. So I'm going to purchase these contracts for $500, and then I'm going to turn around and I'm going to sell them for, if you were to hold them till expiry and you won, all right, they're going to expire at 1,000. So you just took a $500 investment and made $500. Okay? So think about it like this. I know that traditional people who trade the market are going to tell you that, you're only risking 1-to-1 because you've got a stop loss in at $250. But what I'm here to tell you is, when it takes $50,000 to make $500, there's an issue there. There's smarter business. It shouldn't take $50,000 to create $500. You could take $1,000 and create $500 if you're buying the right product and selling it. It's just like Amazon or anything else. All these people drop shipping, they know the products to sell, and they're not ever even investing $1 really, except for their website or whatever. But if they had a physical product, and they had it for $20 and they were selling it for 40, that's what we're doing right here. We're purchasing something for 500, selling it for 1,000, making 100% markup on it. And even that, I don't do that. I don't make 100%. If I can make 20%, I'm doing better than you. Buying a $50 stock, 1,000 shares of a $50 stock, try to make $500, making 1%, thinking that you're making 100% because you're only risking, $200 to make 200, or only risking $500 to make $500, a 1-to-1 ratio. Yeah, and that's true. You are a 1-to-1 ratio within that, but your overall purchase is $50,000, and you got to keep that in mind. And you're over leveraged, you don't think about that kind of thing. That's something that you need to be thinking about all the time. Yeah, you can buy it. Yeah, you can get it. The broker's going to allow you to do that. But is it the smartest thing? No, it's not. Being over leveraged is not smart. And I'm here to tell you, it killed. I've been doing this since 2007, and I can tell you, I've seen a lot of. I've felt a lot myself, and I've seen a lot of people go in one day. I've seen people be on a 6-month winning streak, and in one day just lose everything because of their consumption of lust of money, and they just can't give it up. You know, with NADEX, you eliminate that lust because, well, not really the lust, but you eliminate that that need to let go or not to let go, because you're capped. You bought a $500 contract set worth $500. It's $500. It's either going to expire $1,000 or it's going to expire $0. Either way, you've created yourself a purchase sell type scenario. Whereas if you were in traditional, or stocks or traditional options, even options. I mean, if you look at options, one option, is expensive. So, and you can't make money really with one option. You need to buy 2 or 3. And you can't really make money with those unless you're doing way out of the money stuff, and having something set up so you can try to make money there. So I'm going to leave you with that. That's my opinion. You can please comment. I mean, that's what I want you to do. I'm open for debate, whatever. Anybody that disagrees, that's great. But I'm here to tell you that's the way to look at things. People forget. It's like going and buying a brand new truck or a brand new car. All you look for is the payments. How much are the payments? I used to own a car dealership. Okay, people didn't care I was charging them $16,000 for the car. They could care less. How much are the payments? How long are the payments? That's all they cared about. They don't look at the broads. How much are they paying? $16,000 is going to cost them almost $30,000 over the period of 6 years. They don't care. They don't care nothing about that. All they care about is the payment, and that's just them looking this far, not looking through the whole thing. Yeah, that's all I got. So if you got any questions, please don't hesitate. Ask away, whatever. And until next time, guys, take care.